I always wanted some Valerian steel.
Valerian steel.
Where did you get this much Valerian steel?
What is it?
Valerian steel.
It's Valerian steel.
I want it all.
It's too late.
Hello. We are not talking Game of Thrones, but we are talking steel, and we are talking billions of it. Who doesn't need steel? Let me say that again. What industry, what product, what processes don't require steel? Take a look around you right now. We are surrounded by it, from the homes we live in to the cars we drive in. So, Ternium, ticker symbol TX, is a manufacturer of flat and long steel products. The company's name, Ternium, was derived from the Latin words ter, meaning three, and eternium, meaning eternal, in reference to the integration of the three mills.
Maybe, just maybe.
I thought you needed to know.
Ternium is one of, if not the leading steel producing companies in Latin America, with net sales of $8.7 billion and steel shipments of 11.4 million tons in 2020 alone.
What do you say to that?
Absolutely ridiculous.
Which in itself was a year ravaged by the global pandemic. My own DCF model shows TX stock is currently undervalued by 5x right now. This is purely based on a discounted cash flow analysis. So, what is my overall bull case scenario for the stock over say 3 to 5 years? Stay tuned for this, a no nonsense deep drill, and more. Keep it simple. I am not a financial advisor. I am just a simple trader looking for WPG situations. Yes, explosive exponential potential growth. So please note, this is all for entertainment only. No more plugging. Let's start drilling. Ternium is a vertically integrated steel value chain company with operations in mainly Latin America, which in the order of steel shipment size includes Mexico, other markets, southern region, USA, Brazil, Colombia, and others. They have 18 production plants in the region, together with 2 mining facilities in Mexico. Ternium has a leading position in the Mexican steel market. And why is this important? Because the Mexican market is currently the largest in Latin America. Mexico, Brazil, Argentina, and Colombia accounted for approximately 80% of Latin America's steel consumption in 2020. In Mexico, Ternium focused on value-added products and services, including having a service center network, customer digital connectivity, and new capabilities to provide sophisticated steel products for industrial customers. The steel shipments to Mexico is really diverse, with 51% to commercial uses, 23% to automotive manufacturing, 9% to HVAC and lighting, 9% to other industries, and 8% to white goods. In May 2021, startup of the new hot rolling mill in Pesqueira began. There was a significant technological upgrade to expand Ternium's capabilities, which should substitute imports. Imports in 2020 accounted for 56% of Mexico's flat steel use. I see this as a huge potential market opportunity. They also note annual production capacity of 4.4 million tons, with an option to increase this to 4.8 million tons. Mexico's apparent steel use was 21.7 million tons in 2020, so this could represent close to 25% of the country's requirements moving forwards. We could drill into all their other regions and countries, as there are blockbuster metrics outside of Mexico, but we would be talking for another hour. So let's drill into some numbers. Okay, Ternium just released its 2021 Q2 earnings, and they were simply explosive.
Way too good.
Steel shipments for Q2 totaled 3 million tons, which is more or less the same volume as Q1, but check this, a 25% increase year over year. Iron ore shipments were down 12% quarter over quarter and down 9% year over year, but this isn't really a concern of mine when we drill deeper into the numbers. Net sales spiked to $3.9 billion. $3.9 billion. At the time of recording, their entire market cap is $10.7 billion. So put that into perspective. This represents a 21% increase from Q1, but more importantly, it equates to a massive 125% year over year. If net sales weren't explosive enough, then check this out. Their operating income came to $1.2 billion, a mere 40% increase from Q1, but a whopping, a gargantuan 1,839% increase year over year, which is 18x. Oh me, oh my.
Am I dreaming?
The EBITDA reported backs all these metrics up. They recorded $1.4 billion in EBITDA, a 34% increase from Q1, and I'm ready to throw up 534% or 5x year over year.
I feel sick.
I am going to throw up.
Right now? Right now.
Had enough yet? The last metric to note is that earnings per share skyrocketed to $5.21, up from $3.07 in Q1, and up literally $5 year over year from 22 cents.
Net income in the period reached $1.2 billion, or $5.21 per ADS. Looking out to the third quarter, we expect to achieve new record EBITDA with higher margins and volumes.
Ternium historically has paid out a yearly dividend around Q2 earnings, and it is no surprise that the dividend paid this year was huge. They paid out $2 per share this year, which is almost double the yearly dividend over the last few years.
Regarding dividends, I believe that dividends is approved or proposed by the board in February. We always do that, and we pay dividends once a year. But looking forward, I think that this new level of dividends, at least this new level, can be sustained into the future.
We need to take a look at the curve, and in Ternium's case, they are literally going up in a smooth straight line. The EBITDA has gone up every single quarter since Q2 2020, and it is the same for EBITDA margin. As we already touched on, the earnings per share was more than impressive for Q2, and has also been trending up every single quarter. What about debt? Well, we are seeing a reverse trend in this, and their net debt has been steadily going down every quarter, which is a strong indicator moving forwards and means they are in a solid financial position. So what and why are the numbers hyperinflating? Well, Ternium does note that global steel prices continue to strengthen during the second quarter of 2021. There is a huge current global demand for steel, and it is anticipated that EBITDA will increase sequentially in the third quarter. Together with higher margins and increased volumes, realized steel prices in the third quarter are expected to continue increasing in all regions. Put that all together, and what do I see coming? I see a very strong Q3 earnings on the way.
All of this should result in subsequently higher EBITDA level in the third quarter of 2021.
When we look at the chart of TX stock, we can see that since March 2020, the stock price has literally gone up in a steady straight line. Based on today's price, it had basically 5x'd. So where is the stock going to go from here, knowing that $56 is their all-time high and was reached only last week? The institutional ownership, according to Market Beat, is only at 15.76%. But there was a huge institutional buying spree in the first quarter of 2021. That is something big to note. The short interest is interesting, as it has been slowly increasing. But realize this, the short percent on float is not even 1%, meaning what? Not many shorts believe this stock will retrace anytime soon. When I plug in those numbers to my DCF, this is what gets interesting. Based on Yahoo Finance's estimated 26.2% growth for the coming 5 years, and my own conservative estimates of future growth for years 6 to 10 of 10%, and a terminal growth rate of half that to 5%, the intrinsic value is $357, meaning a 7x multiple undervaluation of its current price at $51 per share. Even with a margin of safety factor of 20%, the intrinsic value still comes out at $286, meaning a 5.6x multiple undervaluation. When we look at the average cash flow growth over the last 4 years, it comes out to 89%. What happens when I slightly adjust the growth forecast for years 6 to 10 from 10% to 15%? And the terminal growth value from 5% to 10%, well, the intrinsic value explodes to $1,172, meaning a 23x multiple undervaluation of its current stock price.
No way, lady. Hell no, no.
Similarly, for the margin of safety factor applied, it comes out at $937, meaning an 18x multiple undervaluation. Holy smokes.
I think I'm gonna vomit.
Now, of course, a discounted cash flow model, like I've always said, is just that, and should not be a sole analytical tool that we as investors should be using to gauge a stock's value or projected direction it will move in.
Well, maybe you need to dig a little deeper.
Essentially, what we had was the COVID-19 pandemic basically shutting down all the steel mill production. What was not envisioned was the recovery speed was quicker than expected, and the demand for steel outweighed the supply as the mills only began resuming productions after. What did this mean? With reduced supply, the price of steel started going up. It is still forecast to keep going up due to demand still outweighing the supply. What does this mean for Ternium? I think in the long term, commodities such as steel will only go up in price, particularly in the markets that Ternium operates in. That means I think there is still substantial growth opportunities in the near future. To summarize, Ternium, ticker symbol TX, has gone up close to 200% in the last year in stock price, but based on the fundamentals and technicals, I believe it is still hugely, grossly undervalued and still flying under the radar in a big way. This is one stock I think you should drill a little bit deeper in, and hopefully you will see what I see.
It makes perfect sense and you know it.
Thanks for watching, and please note, after my own deep drill into TX, I am very bullish on this as a lock-in stock for a 5-year long-term play on steel.
Or maybe, just maybe.
This is Valyrian steel.
So please take this drill with additional precaution, and always do your own due diligence. If you are interested in other WPG stocks that I have in my Freedom portfolio, please check out my other videos and just consider subscribing to my channel so you get a pop-up when a new video is uploaded. I am a simple trader. I try to keep this simple, and will simply see you in the next video.